Hey guys, seems like there is an issue with the internet today, and so the live stream is not coming through so well. However, welcome back. Welcome to another live stream here at AIFO, where I am running a technical analysis just before the London session, and then just staying on for roughly about an hour after the session starts um, to watch potential trades on the lower time frames maybe playing out. So we are in one of the most precarious times in the market, especially within the Forex trading sector, where we have just seen unprecedented amounts of volatility and movement. No clear trends are coming out. We should have seen some consolidation zones or the market consolidating once, maybe twice, but not for as long as it has at this point in time. And then we're seeing just these huge movements as soon as there is an inkling at some news changes. And it's just causing a lot of chaos across quite a lot of traders out there on the market. So I've also fallen victim to this, and technicals have just somewhat been thrown out of the window quite recently, which has been very frustrating. But that is how it is with trading. My theory here is that because we're going through such a complex time within the markets, once all of these issues have subsided, for example, the conflict of between Iran and the US, once the IPO of SpaceX has gone out, once the Nasdaq and the S&P have somewhat found their feet over the next couple of days after that IPO, then we should be begin returning back to normality with a lot of our technical analysis. However, I'll go through some of these. Um, I'll go through where I am at the moment within the markets using supply and demand, price action, breaks of structure, trading strategy, looking for potential signs of liquidity, and these are my general target points. So what we've seen in the market so far on the weekly time frame is that we are in an uptrend, we are pushing up, we are producing higher lows. However, at this point in time, we seem to have pushed up. Well, we're in a very annoying consolidating market at the moment, as I just mentioned. But at this point in time, we can see that we pushed up, we broke market structure, we came back down, we failed to break to a new lower low, which is a good sign. That means we are still pushing up. Once it retraced back into this area, this weekly demand zone, we can see a very sharp push back into the upside. And now the price has pushed aggressively down. That was largely sparked by the increased attacks, but with Iran, Israel. I think Kuwait, that was when they were attacking Kuwait as well. So it just pushed the market aggressively into the downside. And now it re-entered into that verified weekly demand zone, and we are using this as our current area of support. And because of this area of support, I entered a trade on the GBP USD, and I'm currently hoping to see that this trade gets played out eventually. So that is the reason I entered into that trade. Another reason is it came down, it pushed up, it came down again, it failed to break market structure, re-entering that potential demand zone. Sorry, let me draw this out for you guys. So a little bit of a demand zone was formed here. We could see that it came up, came down, pushed up again, breaking market structure, and this is a relatively nice sign that we are potentially reversing into the upside. So that is the reason I entered into that trade. What's also because I'm on the 4 hour frame, by the way, guys, I'm not on the lower frames. So I'm currently in that long position on the GBP, on the GU at this point in time, but we will jump down into the lower frames as we go on. Of course, we've got a lot of currency pairs that we need to analyze over. GBP is exclusively my favorite pair, so that's why I trade it the most. What we'll do is we'll drop over to the euro dollar at the moment, and it is playing very much on what we had analyzed last week and in some of the daily market breakdowns. So at this point in time, very similar to the GU, we are seeing that the price is pushing down, but we are kind of looking for longs at this point in time. The reason why is because, yes, we are pushing down quite aggressively, causing a lot of these lower highs to form. However, what I'm waiting to see is that potentially the price is retracing back into this area. We may then look for that shorting position. I don't think it's going to break this previous low down here. Let me try and clean up my charts a little bit. This is mainly from those daily market morning breakdowns, and I've left a lot of my drawings on these charts. So sorry about that, guys. Let me just break this down, right? So we're just seeing this aggressive push into the downside. What's interesting, we have this verified daily demand zone. We are now beginning to see a reaction to this, potentially because it is grabbing liquidity below here. What I am thinking is that because it pushed down so aggressively, it had formed this open area of a potential supply. So what we might end up seeing on the euro dollar today is actually a push up. So I would be looking to trade those pullbacks before then looking for shorting positions for it to then push down to one of these weekly demand zones. So once it does push, gosh, what is going on with the internet connections today? Absolutely insane. So sorry, guys, for that little dropout there. Where was I? I was at yes, JU. So this on the daily frame, we have now re-entered into that strong area of supply. Now we're going to be looking for potential shorting opportunities on those lower time frames at this point in time. You can see that I already have a potential trading setup here already. Kind of should have really entered into that really, because we've got this breaker structure here. We're now seeing pushes into the downside. What I would generally be waiting for is to see one of these lower lows get broken. If I see one of these lower lows get broken before body market breaks or a full candlestick break, then okay, that might be one of my signals. That is one of my signals to enter. What I would love to kind of see is something like this. It would break one of these lines. Maybe it will go a little bit deeper to one of these three areas, and then we'll see a retracement back into the upside, covering or re-entering one of those areas that originally pushed that down to break that market structure. And that would be my entry point into the downside, targeting potentially some of these lower lows down here. So also you guys can actually see why my charts get incredibly messy while I'm going through. But anyway, we'll come back to the JU as well. But now I'm looking for those shorting positions. I'm looking for those breaks or structures into the downside now that it has re-entered into those high probability areas of supply. So heading over to the DXY, we'll take a look at the DXY. The US dollar has become just incredibly the volatility on the DXY. There is only one trader who had traded the DXY successfully. One of our older traders, he has been using a trading strategy called the harmonic Elliott wave. Sends me his data, absolutely fantastic, and he actually traded this almost to perfection. I was a little bit hesitant because the US dollar is just so reliant at the moment on the speculative news and these conflicts, and we're in one of the most uncertain times. So trading this is just been trudging, walking through a minefield during a thunderstorm, which has been horrible. Yeah, I can see a lot of people here have been also talking to me about the SpaceX IPO. I mean, my general sixth sense on the SpaceX IPO is we already knew that the NASDAQ 100 were altering their rules. I think there was 3 rules that they had altered purposely to allow SpaceX to be entered into the NASDAQ 100. And because there's a lot of traders out there who were not, like international traders, mainly in Southeast Asia and across Asia, who were not allowed to participate within the SpaceX IPO through whatever brokers that they are using. I'm sure there were a lot of workarounds. But due to that, a lot of people saw that these rules with the NASDAQ were being altered to allow SpaceX to be allowed into that indice. And because of that, it just dramatically pushed up NASDAQ. And we've all seen that. In fact, I'll go over to NASDAQ if you guys really want to see. We can see this massive push up, right? This huge amount. This is what has been driving this growth, is because of the SpaceX IPO. And now we're seeing this tremendous drop into the downside. And now this, like, okay, I don't day trade the NASDAQ. I don't do futures. I don't trade the S&P. I just trade CFDs mainly on across Forex. I do play with gold once in a while. I don't touch crypto as much, but I do long-term invest a lot of these So what a lot of things that are happening at the moment pushing the Nasdaq down is we're beginning to see a lot of reports that okay, SpaceX's revenue does not equal its valuation. If you guys have read the SpaceX SEC filing, you would see that a lot of that has been written on future growth. It is all around the belief system that SpaceX will pioneer the infrastructure in space. So my general sixth sense on the whole SpaceX idea is that yeah, okay, for long-term investors, if you really do believe in their vision, you do believe that they are going to build out these data centers within space. They're going to build out these data centers, on the moon. They're going to pioneer space travel, and build all the infrastructure around for it. Then yeah, fine. I think they are worth it. I think they're worth substantially more, but you're not going to see returns from the SpaceX IPO for quite some time, right? That is my general sixth sense, and I think that they're going to be a long-term holding. They're going to be a long-term holding investment, not a day trading asset. So that kind of brings me back to what's going to happen here, right? So what are you looking to short Nasdaq? Are you looking to short S&P? Are you looking to short SpaceX? A lot of what is happening, all of this speculation is happening already. Okay, so all of these drops are based on a lot of these reports whereby the valuation doesn't outweigh the revenue. So that's why we're seeing this dramatic speculative drop. We're also seeing a lot of reports of SpaceX employees. They want to sell their stocks. They want to cash out. Okay, it's not because they don't believe in SpaceX. They want to cash out because, I mean, wow, they're automatically going to become millionaires overnight. So I totally understand that. My general advice here is to kind of wait and see. We're not we're going to see likely a dramatic drop on the first day. Likely we're going to see a dramatic increase on the second day, and it's going to become so volatile. So it's going to be really is going to be one of the most spectacular IPOs we've seen in modern history. But day trading, no one can tell you where it's going to go up or go down. No one can tell you that, right? Technicals are going to be out of the window. We're clearly seeing this IPO is going to be speculative driven, right? So, will people dump Tesla to buy SpaceX? Well, what's very interesting is I don't really believe so. I think there's a lot of people who are liquidating their positions, most notably in crypto. We're seeing a lot of liquidation happening in crypto. We're seeing a lot of liquidation happening in XAU, and this could be their institutional investors dropping out of these investments to raise liquidity, to raise the cash to purchase and buy into the SpaceX IPO. That could actually be what drove a lot of this NASDAQ push into the upside as well. So, from retail side, guys, I don't know how to explain this, but from the retail side, we're very small in the market, right? We're completely driven by the institution. So that's my general overview of SpaceX. I personally have already brought or at least queued up to purchase some SpaceX stuff, but I also do long-term investing as well as my day trading. But I only day trade Forex, right? I don't day trade stocks. I don't day trade indices. And I don't do futures. So that's my general sixth sense. But yeah, okay, we're seeing this huge liquidation in NASDAQ at the moment. What's also quite interesting is, yeah, we're seeing a huge push up within the DXY. If you guys really want to know, a large portion of this was driven by the stronger than expected non-farm payroll data that came out last week. And now because we're seeing that the U.S. economy is looking a bit stronger than what they had previously anticipated, because of this information, the Federal Reserve is now more open to increasing interest rates. They were very hesitant about increasing interest rates. So the next, I don't know when the next announcement is for the interest rates to be announced, or the Fed Reserve to announce them. The likelihood is that they're going to increase interest rates. And so that's why we just saw this massive push into the upside, as well as that conflict happening within the Middle East. I think a lot of it was kind of all bundled together. And this is why we're in just such an uncertain time at the moment, right, within the markets. Anyway, gosh, okay, there was a lot of information there. returning back to our technicals. Okay, let me just jump back out to the daily, because based on the daily, we can see that yes, the DXY pushed up very aggressively and then re-entered into this potential supply zone, which we can now kind of suggest that it is a supply zone. It also dropped into this potential liquidity, which we can again say is liquidity, because it came up and then there was a sharp reaction to that. Will the DXY continue into the downside? Likely not. Well, probably what we are seeing at the moment is a push down or a retracement back, maybe to the 0.5 fib. If you were looking at the 0.5 fib on the daily, onto those lower time frames, we'll drop down in a second, and then we're likely going to see the DXY continue into the upside. We are in an uptrend, guys. We are pushing up. We are looking for longs on the DXY. And ultimately, vice versa, that's going to push a lot of our major currency pairs into the downside. Okay, so we can drop down into, let's say, the hourly. And yes, we are beginning to see those signs of those pullbacks. So the pullbacks are happening. We've got beautiful breaks of structures here. We can see that this price action candlestick here is that indication that liquidity was taken, pushing the price down, breaking market structure. And now we're just waiting for the price to come back up for that retest. I think it already has, actually. I have not been looking at the DXY for quite a while, for the last 2 days, so close enough, I guess. Yeah, so it's coming up, and now we're beginning to see that push back into the downside. I think what we're likely going to see, because we've got that breaker structure here, what we're likely going to see is, I don't think it's going to break below here. I don't think it's going to break low and then here. I think that is going to be where it bottoms out. So I think the price is likely going to come down here. And then if we see another breaker structure on the lower frames here, I would then enter into that position. That is exactly how I would play it. This will be what I would be looking for the DXY. And remember, originally when we're looking at GBP and the euro dollar, we are looking for those short-term long positions. So this plays very nicely into those short-term long positions, because the DXY has to come down just a little bit more. I think this is where it bottomed out. I don't think it's going to break this previous low. If it does, then we're going to have to reevaluate what's happening here. But I think it's going to come back down slightly, which is going to push a lot of our major currency pairs up. We'll jump back. We'll jump back to the GBP USD. You can see what I'm looking for at the moment. So I'm waiting to see this price, or the GBP, to push up to around these areas here. I might actually exit a little bit sooner than this. Usually around the yearly or the monthly, I'll probably exit that position. So anyway, based on that, so the DXY, we're waiting for it to come down just a little bit more, and then we'll be looking for those long positions. We're currently in those long positions at this point in time within the GU and the euro dollar. USD JPY we don't really want to play with at the moment. I mean, you guys, of course you can, but it's just not really my... I don't like the manipulation that is happening here. You know, very easy to just get generally stopped out. All right, now let's head over to gold USD. Oh, we're just trending down beautifully, right? So we're just trending down absolutely beautifully. So for any of you who are looking for those shorting positions, absolutely. So we are certainly looking for those shorting positions, those shorting opportunities today. This was not an entry. This was a potential entry. What I was hoping for was actually the price to come up just a little bit more and re-enter into this box here, because this acted as the area that I identified as a potential supply zone. And so I was hoping for the price to kind of retrace back up into here, and then I was going to short, but I missed that opportunity, unfortunately. So we're waiting for today, because London has started, which is great. Oh, I was kind of hoping they'd push this a little bit higher, to be honest. Got a very nice breaker structure here. What I would be waiting for is to see the market do something such as this, and then I would be entering into that position. By the way, I know quite a lot of you are likely scalpers. I'm not a scalper, so these are long-term plays here. I'll be waiting to do something such as this for gold XAU, USD XAU. We can drop down into the hourly frame and look for a little bit more of a refined entry. However, yeah, we got the breaker structure here. Yeah, we might see a pullback up to at least this point, perhaps also. Yeah, like I wouldn't be upset. I wouldn't be upset if I had if it does pull back to here. I wouldn't be upset if I got stopped out from this. Let me delete this here. This would be a general trade that I might be looking for on gold USD today. So if we see a nice pullback to this range here, just to where the daily open is, I might actually just enter into that shorting position from there with my stop above this previous high. And even if I did get stopped out, I wouldn't be so upset about that. I think that's okay. That's a pretty relatively good trade setup. And then where I'd be looking at TPing would be one of these previous lows down here, right? So we want to go beyond that low because remember we're in a shorting position, so we're likely going to be breaking that market structure. We're looking for 1 to 2 risk to reward ratio with that. But hopefully, if it does come up and we enter and then it starts to push down, I'll likely bring my stop to half of where it is anyway, and that should bring me up to a nice 1 to 2.5 risk to reward ratio. So that's the play I'm looking for at the moment on XAUUSD. So back to our GBP USD. GU, absolutely wonderful. I'm so surprised that the GU has not fallen further in this. The UK economy is just, I don't think it's looking all that great, to be honest. Let me just lock this in. How much leverage do I use when I enter? Oh, I'm not. So the trading accounts that I use, we're doing prop trading around Forex is all 1 to 100 leverage, and my average contract sizes are around about 1.5 to 2. When I'm playing with GBP USD, that's usually what I'm playing with mostly. So that's usually about $300-400 loss to about a $1,200 win, and I look at doing that most weeks. So. Yeah. And my win rate at the moment on my success rate is about 68 to 72%. So yeah, it's not 100%, obviously. No one's ever 100%. But there are some traders that I've been following who have just been showing just an incredible variation of the Elliott wave. I'm sure you guys all know about the 5-wave Elliott wave. It's called the harmonic Elliott wave, and it's just such a complex strategy, and I'm trying to kind of understand it. And we're actually going to be bringing out some material to teach you guys how to read it and use it in your trading. What about Bitcoin? Oh, well, that has just fallen off a cliff. If you took a look at any of my my daily market breakdowns, we have just seen this absolutely falling off a cliff. So I'll give you a little bit of context about Bitcoin. Bitcoin is a massive risk-on asset or financial class. It is the last financial asset that an institutional trader would likely purchase over any other attractive asset, right? What that means is if we're seeing, like, for example, SpaceX IPO, then we're going to be looking at the New York Stock. We're going to be looking at the indices trading on the New York Stock Exchange. So S&P 500, NASDAQ 100, these are going to be very attractive to me. We're hearing that there is going to be potential interest rate hikes on the DXY, so I'm going to be purchasing US dollars. There's a variation of multiple different AI stocks that are looking to potentially list sometime this year. I think Anthropic wants to go to IPO. OpenAI wants to IPO. So there's a lot of incredible stocks or companies that want to list. So what's the first thing I do? I'm going to remove crypto from my books. That's one of the first things I do. So that's one of the contexts or the reasons why we're beginning to see a huge push into the downside. That's one. There's multiple, but that's one. And it's the one of the biggest that I follow. And this is why I don't really trade BTC. I hold crypto. I hold it 100%, but I don't trade it. I don't really trade it. I really should have traded it actually. It's just fallen off a massive cliff. Absolutely just fallen off an absolute cliff here. But I had done my general analysis on this, and so in my honest opinion, I would not be surprised if we re-entered the 80 to 90,000 mark by sometime the end of this year. I think if the conflict dies down, because we're in a very complex state at the moment, so everybody's a little bit on edge, and a lot of funds and investors are putting their money toward more safe assets, I guess. DXY being one of them. That always is safe when there's a big conflict happening. But now there's a lot of this news and interesting stuff that's happening on the stock market. So I'm going to be liquidating and putting a lot of my cash there to try and increase my returns, right? Once we get through a lot of this uncertainty and a lot of this movement and a lot of these new IPOs buzzing around, and once the waters start to settle, so to speak, I don't argue that BTC will likely see a nice reversal pushing back into the upside. Where that reversal happens, it's anyone's guess. We could be seeing a potential reversal at the moment, because on the daily, in fact, this should be a weekly. Yeah, on the weekly frames. So on the bigger picture, we can already see that BTC has re-entered into this weekly demand zone. And so based on a lot of the technical analysis and a lot of the strategies that I use personally, this could be a very nice reversal point, right? So I would be looking for potential reversals from here, from this area. This is where I would be looking for them. If the reversal doesn't occur, then we'll likely want to be looking for a zone around here. But I don't think BTC is going to drop down to the 30,000 mark. That's just incredible. So a buddy of mine said that the hard support is at 55K. So that would be around about here. If it does continue down, a buddy of mine did say that this would likely be where it would bounce from back into the upside. So I wouldn't be surprised. But at this point in time, the reason why a lot of people are just selling it off, I think there's just more attractive assets that they want to add to their portfolio. BTC volume is king. Can't exclude BTC as an asset. Too easy to trade. Absolutely. Couldn't agree more. I mean, you can use supply and demand trading, and it has been working relatively well on BTC, but it's a very, very volatile market. I just don't like how unstructured it is. That's my only issue with it. I think it's a fantastic. I've been in crypto companies previously. I think crypto is a wonderful thing to hold on and trade with, and I love the idea behind it. But Forex is the biggest market in the world. It is the biggest. It has the most structure, and I like structure. That's why. So with macroeconomic events like interest rates, inflation, CPI, unemployment, non-farm payroll, all the fundamentals that go into Forex is why I like it, because fundamentals always beat technicals in the short term, but they give a really beautiful direction for where our technicals are going to go. So if unemployment rate is much lower, then we're going to see a strengthening of that currency. And so we know we can use technicals to map that out. I like that structure. With BTC, you get, is it SIA, or MicroStrategy, or they have one, announcement in the news that, okay, we might sell a portion of our BTC, and it just drops. So I'm not particularly fond of that aspect. But I wouldn't be surprised if by the end of this year, BTC rebounds back into the upside. I wouldn't be surprised. That's my general sixth sense of this. Okay, so dropping back to GBP USD, let's just drop down to the lower time frames, and then we can just play around with the lower time frames. So we can actually see at the moment we got a really nice breaker structure into the upside. We got a lot of these ascending highs at the moment. This is on the 15-minute frame, by the way, guys, so we are moving a little bit faster now. We could, if any of you are stock chart pattern traders, you are seeing an ascending wedge, and you are seeing that ascending wedge play out. which is really, really cool. We got a really nice breaker structure here. We now can see the price retrace back into this potential demand zone. The reason why we call it a potential demand zone is because when price was previously at this point, it pushed up, it broke market structure. It's now come down, it's getting rejected, i.e. the retest. So this might actually act as a really nice little entry for whatever trade you might want to play out with. 1 to 2 risk to reward ratio, trying to target this previous high. Hopefully it does break this previous high, right? So I wouldn't be upset if I had taken that trade either and got stopped out. That's perfectly fine. That would be my general analysis for that. Trading above the 200 EMA, we can come back to that. Already pushing into the downside, but we'll come back to that in just a moment. Let's take a look at what the euro dollar is doing. Well, euro dollar follows a very similar pattern to the GBP USD. So we are looking for those potential longs on the euro dollar. While I need to zoom out, my charts are just absolutely insane at the moment. We are looking for those potential long positions on the euro dollar because we want to see the euro dollar retracing back up to this point here. If we see a nice breaker structure here, and then I am fairly certain that we will see a price re-entering into this area. Once we see a re-entry into this potential supply zone, we will then likely see a huge drop back into the downside. What I would be a little bit cautious of is we are on the 4-hour frame, and so if we do see a full body break of candlestick market structure here, we may actually just see that reversal from this point anyway. So being kind of hopeful, we can drop down to the lower frames and take a look here. So very similar to the GBP USD, we are seeing those breaks of structures moving into the upside. We are seeing that retest back down, and we are looking for those long positions. So I wouldn't be so upset about doing something such as this. And looking at a 1 to 2 risk to reward ratio on this one. I'd like to play this one a little bit more safe if I were to enter into that position. So we can leave that there for the time being. What's it? It's 8:27 in the morning. Ugh. By the way, if there are any instruments that you want me to go and take do a little bit of analysis of, you're more than welcome to ask me. Happy to go and take a look. My goodness, my charts are looking pretty funky at the moment. There's a lot of drawings. It's just the GU. I mean, GU I'm generally just waiting for, really. I don't think I'd enter into any positions on the JU today, personally, but if we start to see some nice pushes back into the downside, some nice breaks of structure on the lower time frames, then I would be entering into those short positions and trying to target some of these liquidity lows or liquidity that was left below while it was pushing up. That would be my only push, my only setups for the JU. I think what's interesting, we're seeing crude oil pushing down at the moment as well. So I'm a little bit concerned. If crude oil is pushing down, that means the markets are a little bit less sensitive to any potential flare-ups in the conflict. But we're seeing the DXY pushing up as well. So that's not really a good sign. If we're seeing oil coming down and the DXY pushing up, and we've just analyzed that the DXY needs to come down a little bit more, then I'm a little bit more confident that our other major pairs are going to push up slightly, if that makes any sense. No, it's not trending together. It's not, no, because oil is pushing down. Oil's coming down. Look at this. This is the daily frame, by the way. So we're actually beginning to trend down. And the last time we were at this level was back in April. So we're beginning to see oil prices going a little bit lower, right? Which, if they were going up higher, then yeah, if we were with the DXY, they would be consolidating, not consolidating, uh, confluencing? Confluence? No, that's not the right word, is it? They should be going up together, right? Because those are clear signs that conflict is about to occur, escalate, or get worse, right? Um, and so this again kind of plays into the DXY coming down a little bit more because oil is coming down. That's why I'm a little bit more confident that the DXY is in a pullback zone. So I shouldn't have moved that. Just removing some of these so you guys can see a little bit more clearly. A large portion of this push into the upside is because the US economy is strengthening. It showed very clear signs of strengthening. The non-farm payrolls came out. It was expected to be, I think it was 85,000 new jobs. Or, well, yeah. And it came out at about 170-ish, 170,000-ish. I don't know the numbers off the top of my head. But because of that, the Fed has been incredibly afraid of raising interest rates because they don't know the strength of the economy at that point in time. But because the non-farm payrolls came out and it was a lot better than expected, everyone's speculating that the Fed are now going to be given a green light to say, okay, we're going to increase interest rates. We should be seeing inflation coming out tomorrow. Oh, later today. Oh, sorry, that's my fault there. Yep, should be coming out later today. Forecast to be 4.2%. So if you guys don't know, inflation, the higher the inflation is, the stronger the currency becomes. And we did a really good video on Forex fundamentals and macroeconomic fundamentals here at AIFO. So the inflation rate, the reason why is because the higher the inflation rate, it prompts the central banks to increase interest rates. That's how you decrease inflation, right? If inflation's going up, you increase interest rates, and it's supposed to put inflation back down, right? So if a currency has high inflation, then we know that that currency is likely going to increase interest rates. So as an investor, I'm going to be very attracted to just putting a substantial amount of money or purchasing a substantial amount of your currency because I'm going to get higher interest off of it. It's free money, right? In essence, technically. So higher inflation, we can see at the moment, the US dollar is forecasted to have a slightly higher inflation year over year. And again, that would then prompt the Fed to increase interest rates, which we're likely then going to see a push up. So if that's coming out at 1/2, we still have a little bit more. We still should see the DXY push down just a little bit more. Grab that liquidity, come down, push down. So because obviously we're going to likely see the inflation data, if it's forecast to be a little bit higher, this is likely going to push the DXY even higher, right? Aggressively. But before we can do that, we need this to come down a little bit more. The reason we need this to come down is because we need to get people out of their positions. We need to get some people out of their positions. I guess that could be what this is. And that is why I said we're likely not going to break below this point. Okay, so I don't know if you guys heard what I was saying at the beginning of this stream, but we're likely not going to break this point. And DXY is showing all signs of pushing up again. So you have the technical analysis showing that it's going to go up. We have the macroeconomic factors saying that it's going to go up. The only thing I think that could really just drive this all the way down is if Trump says we have a peace deal. If he announces that today or this week, then everything goes out the window again. Right? Gosh, it's been such a horrible time trading these days, these last couple of days. So back to GBP USD. Drop back down to that 15-minute frame. Cool. So if you had entered, then okay, you're starting to see a little bit of profit, but struggling. Wow, it's a real struggle. Where are we? We're about 20 seconds away from the 5-minute candle. Push up. What I also like to do is kind of look at the community on TradingView, and we can kind of go through a few of their minds. Like, just be very careful. I don't know if you guys can see my screen so clearly, but just be very careful of these types of things. You know, I see they're very mechanical, and a lot of them are based on individuals who, or what I found is that the trade had already played out, and then oddly they quickly put it all into the chat, into the community, and say, "Oh, follow my thing." And then when you go and take a look, you're like, "Oh wow, they got it right." But actually, they didn't do anything. They're just showing you historical data. Be careful of that kind of stuff, because then they're just trying to get you to follow them or go and join a Telegram group chat or something, and you know, a lot of their signals can end up making you lose a bit of money. Um, Maintaining bullish momentum above support. This guy called Lucas, yeah. Sells anyone? I always love reading the community. You know, you guys really must have your own strategies and follow your own strategies, but the community is always divided between longs and sells. I mean, obviously it either goes up or down, but it's just fantastic to kind of see everybody how they analyze and interpret the market. Are you saying what if the war ends? If the war ends, then the DXY is going to drop dramatically. It is going to drop absolutely drastically. What we can do is we can kind of zoom out. If the war ended, let's say if it ended today, we would just see an absolute fall off a cliff. It would likely do something like this. It will come down here. There'll be a potential pullback. We'd likely then see it come down to this level, another potential pullback, and it will just continue dropping down. In fact, this was the original price target. Let me show you. In fact, I'm going to have to go all the way out because of the conflict. We saw the DXY was just pushing down very nicely, easily, falling very nicely into our technicals. And then we just started to see all of this horrible consolidation on the higher and lower time frames. But the original target was the price was supposed to retrace back up to here, and then it was supposed to come down to this around this area. It was actually supposed to do something like this. These were the original targets because we were trending down. So if the war ended, then it's likely going to return, and we'll likely use these as our potential targets again. It will just fall off a cliff. It will fall off a cliff. It will just push down so aggressively because during uncertain times, the greenback or the dollar is incredibly attractive, right? It's incredibly attractive, and so a lot of investors don't want to. They'll likely sell a lot of their risk on assets. So crypto always goes first. Second will be the stock markets, and then you have your derivative. You'll have your you know, other types of securities and financial assets. And then you move into currencies, right? So they would sell a lot of this off to purchase your currency to protect well their capital, right? And usually in times of uncertainty, and when there is a war on, interest rates are pushed up. They are pushed up quite aggressively. So that's the reason why. And so if conflict stopped, then what do you do with your money? DXY is no longer attractive, right? Fall off a cliff. Fall off a cliff. They'll likely, because the Strait of Hormuz will be open, global trade will return to normal. We'll then return to talking about all of these great AI companies popping up and out, and you know, and so a lot of investors will put their money into those into stocks such as that. That's what would happen. And based on that information, if there was a peace deal, you're going to be looking for long positions across all your major pairs. It will be a wonderful day. Be a wonderful day. Even if you miss the initial drop, it will just continue dropping. And you can do really, hopefully you can make some money from that. I know I sure as hell would. Heading back to GBP USD. Oh, it is pushing down. Sorry, let me lock that in. Even if we get stopped out today, it happens. Been stopped out so many times over the years. Horrible feeling, but you got to control it. Euro dollar will likely be pushing down as well. Yeah, that's what we're seeing at the moment. But I'm relatively quite confident with that. I think it's a pretty nice little setup. You know, we've got all of the ingredients for a continuation into the upside. We've got a really nice breaker structure here. We failed to break this lower, so it means we're going to continue up. When we pushed up, breaking that structure, we created this little demand zone here. The price came back for that retest of that demand zone on the 15-minute frame. And then we somewhat should have entered from this point, but we didn't. We entered up here. And we should see it continue up. It's breaking structure here, but a wick break is a weak break. We don't like wick breaks. Wick breaks are not that great to go off of. We want to see full body candle breaks. When we see full body candle breaks, this gives us more confidence. But however, I'm still relatively happy with this little setup here, even if we get stopped out. I've got a lot of people from the community trying to who have asked me to do the Swiss franc and the USD CAD, the USD AUD, and the AUD NZD. I don't know if any of you guys are playing with these other minor currency pairs, but you know, I'm more than happy to do a preliminary analysis of these currency pairs if you guys are trading them. For AUD, NZD, so Australia dollar to New Zealand dollar, I just saw that it came down to one of these previous demand zones, and so I actually entered a position this morning with that. It looks like it might get stopped out. Hopefully not. I'm seeing a bit of a retrace back into the upside. But I don't know if you guys are playing around with these minor pairs. If you are, we'll likely begin including that into the AIFO daily market analysis and live streams into the future. But doing these analysis takes a little bit of time. Let's head over to BTC. Ooh, we're beginning to see a nice little retracement. That's very good to see. However, oh, look at all of this dissension though. And we are just creating, if you guys do stock chart patterns, I don't know what strategies you guys use, but if you are using candlestick patterns, then you know a descending wedge will have a temporary push up, likely grabbing some type of liquidity resting. But I'm sorry guys, let me clean this up. This looks horrible. There we go. A descending wedge is actually a bullish pattern, and that is playing out perfectly. We might see this come up just a little bit more up to this area. I don't think it will break here. I think we're going to see another push down before maybe pushing up. I don't know. I mean, we're just in a downtrend, so I'll be so cautious. I mean, what I'd love to see is that because it's dipped into this weekly demand at the 60,000, yeah, it was at the 60,000 level, that we begin to see the reversal from here. I mean, could be worth the try, right? And just ride it back up to hopefully the 70 to 80,000, but I don't want to take that risk. I am not looking at taking that risk. Seeing quite a lot of good volume though. A lot of volume with the London session pushing it up. Although not much volume is happening on the hourly. So let's return to gold. Okay, it's not playing into my vision here. What I was hoping for was that the gold was going to push back up to around this level here, and then I was going to enter into that shorting position. But it just looks like gold just wants to continue going down. If it does continue going down, I'm on the hourly. If it does continue to go down, then the next logical area for a reaction is down here. This will be the next logical area for reaction to occur. So if we drop down, I don't know if you guys really are wanting to play on the much lower time frames, so the 5-minute frames, then okay, that might be where you want to target if you're in those shorting positions. Maybe you'd want to do something such as this. Like I wouldn't be totally upset, but quite honestly, I still think it needs to go up. I still think that there needs to be a bit of a push into the upside, but um, the point of this is not about entry, it's not about stop, it's about target. So if it is going to continue going down, and if you guys are into that in a shorting position already, this would be my general target. That's where I would be looking for to take my profit. So I'll leave that up just for the time being, and I think when we do a daily market breakdown, I think we're going to do another one on Friday. We can come back and take a look at this. Return to GBP USD. Ah, it's pushing back down, isn't it? No. How frustrating. We're we're bringing out quite a lot of short form content as well, and one of those short form contents we created was around how do you not overcomplicate your charts. I seem to have completely avoided our own information, but it's not so much about overcomplicating your charts. It's about actually defining your strategy. Whatever type of strategy you're using. I mean, you could just be using breaker structure and change a character strategy. Perfectly fine. I've seen quite a lot of people trade that, and I think they do about 60% win rate on a 1 to 3-ish risk to reward ratio. And remember, if you are always doing 1 to 3 risk to reward ratio, you only need to be right 33% of the time to be profitable. So they're right over 60% of the time, and so they're very profitable, right? I'm supply and demand trading. There's so much great content out there around supply and demand because it's the most simplest concept, yet somewhat complicated idea out there. It's like a complicated strategy, but it's very simple, which I really like about it. Zone to zone trading, which is really good. Candlestick patterns, I don't think are very good at. I just use them for confluence. I use them a little bit for confluence. I think it's better for scalpers. Like orb strategy, I think there's something called the open range breakout strategy. I think that works really good for scalpers because you want to be on the minute time frames. And those minute time frames are where you're likely going to want to use and play around with that strategy. But yeah, no, supply and demand, I think it's just worked for me so well. Not in these last couple of days, though. I'll be honest, guys, it's a very hard market to circumvent. If you've been profitable recently within this market, then well done. Well done. I myself am more around the break-even, slightly profitable stage of the last 2 or 3 weeks. Luckily, I'm not in a loss, you know. Here we go. We're starting to see a bit of a reaction now on the 15-minute frame on the GU. Let's see how the euro dollar is doing. Euro dollar, okay, a little bit of a reaction, but we're not seeing anything major pushing into the upside. Let me remove these to keep the charts as clean as I can. I don't know why this isn't. There we go. A little bit of push into the upside. We're about 2 minutes away from the next 5-minute candle, so hopefully we should see something nice occur on the 5-minute candle. It's really cool when you analyze all different types of trading strategies, all different types of you can see the advantage, the strengths of each trading strategy. Of course, I'm just exaggerating here, but you can see a really nice fair value gap was formed right here. And so for any FVG traders out there, oh, nice little entry. If you were going to be pushing, if you were going to trade from here, I mean, any IFVGs, right? Inverse fair value gaps. You can see if it just shot through here and the full body candle closed down here, then fine. Yeah, we'll likely be in that reversal. You can exit that trade potentially early, but I've learned my lesson. I've learned that lesson the hard way. Exiting trades too early, even if it's in the red. Just gotta let it play out. Just gotta let it play out and hope for the best. Patience is such an undervalued key characteristic of trading. So back to GBP, I kind of like the GBP community. Don't know what happened recently. There were so many traders in the GBP USD community just constantly just discussing. I think there's a lot of people who had just started trading and they were just really frustrated with understanding the market. And I get that. I've been there. Sells anyone? Time to rotate. See, this guy got a few. Holding my sells from 0.34 and wants the TP at 33. TP at 33. Where is this guy targeting? Okay, yeah. Ambitious target. Yeah, I could see that happening. Yeah, we could see that as being the pullback. So we could see this just being a pullback. Maybe my overall trade won't actually play out. Fair enough if it doesn't, but yeah, could be that pullback to the 0.5 fib and continuing into the downside, which we are going to see because the DXY is going to go up. What I was hoping for is we'll just see a little bit more momentum pushing upward. I was kind of hoping to kind of exit the position around this area, or if we get the 200 EMA, I was hoping to kind of exit around this area. You know. So fair enough. Yeah, this guy saying full TP at 0.33. I respect that. I think that's a pretty good entry, but he's shorting from 0.4. I might have been stopped out already. Oh well. Time to rotate out of GBP. Yes. I know that feeling. Buy setups. Everyone's saying to buy. Trading within a stable resistance. Oh, usually the community is a lot more interesting than this. Oh, it's a shame today. Short trade setup. Ooh, somebody's shorting the DXY. Interesting. Well, we are also looking for the DXY to come down a little bit. Not by this much, of course. That's if there was a peace deal. How's XAU getting on? Yeah, it seems as though that would have been a pretty generally good entry. I didn't enter this, by the way. I've just put this down for targeting. I just want to see it whether or not the target would play out, but I've not entered into this position, so even if you see the red and the green and it does play out, it's not my real trade. Just want to stay honest here. Inverse fair value gap, making it a key area for potential bullish continuation during the London session. Somebody's saying that this is going to continue going up. That'll be nice because then hopefully it will re-enter the area where I had originally wanted the price to return to. But it's just insanely obvious that we are looking for those shorting positions on XAU. Just look at all this. Yeah, fair enough. There's a lot of information here, but this is just historic information. It's not how I do my future analysis. My future analysis is usually coming from, this line here onward. This is just previous historical information where, based on those trades I've previously taken using supply and demand trading. Anyway, the point is that we have crossed below the 200 EMA. We have been producing all of these lower highs for such a long period of time, all the way from up here. We are looking for shorting opportunities. We are looking for those shorts. Like I said, I mean, the next strong reaction, I'm thinking, is when we hit into this weekly demand. Once we get into this demand, we may see a pullback to, because we're breaking market structure to this point here before then pushing down. So for any of you swing traders out there or long-term traders here, that would likely be the setup I'd be looking for personally. Um, um, if we see that continuation into the downside. Okay, so that's what I'm generally waiting for. We're looking for shorting opportunities, shorting on XAU. BTC, we're just hoping it reverses one day, you know, one of these days, hoping to see that reversal. Really nice push into the downside. Any of you who had actually picked up that BTC was going to fall, well done. You did a very good job, very good analysis. Congratulations. What I'm now looking for is those potential reversal points. Like I said previously in this live stream, I do not day trade BTC. I hold it. I hold crypto, but I do analyze it for all you guys. I think you guys do a lot of. We have so many traders at AIFO who play around with crypto. Perfectly fine. So just my general analysis. Could we be seeing this point as our reversal? That's what I'm waiting to see. That's what I'm hoping to see. I'm hoping we see a reversal back into the upside. DXY, we want this to come down just a little bit more, but we're not going to get this inflation rate data out on this live stream because I'll be wrapping this up in the next 5 or 10 minutes. But what we are waiting to see is that inflation rate year over year is actually correct. It's 4.2% or higher. If it's 4.2% or higher, this thing is just going to continue pushing up. I've already gone over this, but interest rates are likely going to be increased in the US, and that's what is likely going to push. That's what's likely going to get traders to speculate, or institutional investors to speculate of the price going up. Okay, so we are hoping it comes down just a little bit, just so that we can support our long positions on our major pairs in wait for that macroeconomic news to come out, and then we'll just see a huge push into the upside. I could be wrong. Okay, that inflation rate might come out incredibly low, and we'll just see it completely pushed down. I mean, everything in trading is speculative to the trader, right? Not speculative, subjective to the trader. GBP USD, yeah, we are looking for those short positions. We are in those longs at this point in time, but we are in a descending trend, and we don't want to go against the trend. I just generally like trading the pullbacks occasionally, because I think I got the target locations generally correct most of the time. That's just from experience. But ultimately, I am looking for those shorting positions. So if this trade does play out, hopefully it does. If this trade does play out, I would likely exit my bigger trade and look for a shorting opportunity, because we know that DXY is likely going to push into the upside. Same thing with euro dollar. It's struggling here. This might actually just be stagnating. Might just be stagnating and just waiting for that data to come out. If it is, then there's no point in staying in that position. But I was kind of hoping it was going to push up a little bit more today, especially with the London session, pushing up and just grabbing whatever liquidity might be resting above these previous highs over here. That was my general philosophy for this trade. But if it's stagnating, then I'd likely just exit that position and just wait for that economic data to come out. USD JPY, I mean, now we are looking for that potential shorting opportunity, that extra manipulation. Sorry, not manipulation. We are looking for that potential shorting opportunity to try and grab that liquidity that is likely resting below these lows down here. If we see a really nice push into down, like a lot of that manipulation, then we'll likely target some of these previous areas down here. But I'm not touching JP, Japanese yen, and USD. Oh, USD to JPY. I'm not touching it because of what we saw previously. I do not want to be playing around with a currency pair that is not prone to any technical or fundamental analysis. It's just pure manipulation. I don't like that at all. And like I said, that's also why I kind of don't like trading cryptos, because it doesn't have structure. So if there's no real structure and we're just seeing massive manipulation, I'm not going to play with it. But if I am going to be looking and entering into a shorting position, then these are going to be the lows that I am going to be targeting with the JU. Um, XAU, we've already gone through that. We are looking for ultimate short positions. If there is going to be a pullback, this is likely where the pullback is going to occur, and then I'll re-enter into that short position if I get stopped out from here. I'm not in this trade, guys. Just to make that very clear, I'm not in this trade. But if we do push up, I would enter. This is where I'm going to exit the position in the larger trade. In the lower trade, if I had entered into this position, this would be where I would be getting out. So if you guys are in those current shorting opportunities or current shorting positions, this is where I'm looking for TPs. That's my general analysis would be. This is where the price is likely going to end up going. That's mainly it, really. I mean, BTC USDT, like I said, hopefully this is going to be the reversal point. We've gone through that a little bit, quite a lot. After the SpaceX IPO, gold should recover a bit. I mean, sure, maybe anything is possible. I mean, we could role play this out. A lot of the SpaceX IPO is going to be the biggest wealth generating IPO, I guess, in modern history. What that means is you guys don't think of the retail investors or the institutional investors. You got to think of the employees. I think there's several thousand SpaceX employees, as well as OpenAI when they go IPO. I don't know when they're doing it. They've already filed for it, but they've got several thousand employees as well who hold a substantial amount of stock. So overnight, you're going to have this huge pool of millionaires based off of this IPO. So where are they going to put their money? That would be what I would want to ask. Right? Where are they going to? Because I mean, sure, they're obviously going to sell and liquidate their SpaceX stocks into US dollars. Another reason why the DXY might push up because more people are buying it. Um, will they put it in gold? Will they put it into hedge funds? Where are they going to be putting? That would be the questions I would want to ask. And then if I find out, okay, what is the where are they going to be putting a lot of those millions and where's that money going to be going? Then I would be looking at the industry of that choosing. So if it's going to be in housing, okay, and then we might want to look at mortgage-backed derivatives, which, by the way, that's a little bit more complex than what we're doing at the moment. If they're going to keep it in the bank, then okay, DXY is likely going to remain high, right? That would be what I would be asking myself. I don't know if gold's going to. It might recover, yeah, 100%, but I don't think it's going to trend reverse. I don't think the gold is going to reverse back into a bullish trend, not for a little while. Because if you guys remember, 2 or 3 months ago, 4 months ago, Goldman Sachs or a consortium, maybe I shouldn't say that, but a consortium manipulated gold, and I think that just became a little bit untrusting. It pushed it to an all-time high. So we can take a look at gold. Yeah, I don't argue that there will be a recovery, 100%. Markets always find a recovery, but I don't see gold trend reversing. I don't see anything like this happening. It's not. I just don't see that happening. I think we're just going to see a nice treacle down. We're going to see a few bumps in the road. We're going to consolidate for a while. And then maybe after several more months, we'll start to see a climb push back up a little bit. But I don't think we're going to be reaching what $5,600 mark, not for quite some time, and especially not just because of the SpaceX IPO. That's my general sixth sense. But we are going to see a slight recovery. We're going to see a pullback, 100%. And I think that pullback is going to occur around this weekly demand zone. This will be the key level that I'm going to be focusing on the most if I'm going to be playing around with short-term long positions. I hope that answers the questions from from a lot of you guys. Yeah. I mean, I'm clearly not a, 50, 60-year-old institutional trader, right? So, maybe you get some more information from elsewhere, but just generally based on the way I would see SpaceX's IPO going, It's going to make a lot of millionaires. Where are they going to be putting their money? That would be my big question. And where they put their money is where I'm going to be interested in. And I don't think gold is going to be where they're going to put their money. That's my general sixth sense on that. But yeah, I mean, I personally have queued up to purchase SpaceX. It's not an asset. It's not a stock that you're gonna want to day trade. Personally, I mean, maybe you guys know better than me on day trading the SpaceX stock. You might have heard something that it's going to go down, it's going to go up. I don't know, right? But as a long-term investment, I don't see that as being a bad long-term investment. In fact, I personally, I'm just going to be looking at dollar cost averaging it for the next 20 years. Why not? SpaceX is a wonderful company. I read their filing report. No, their revenue does not equate to their valuation. God, no, they are way, way overvalued. But I believe in their dream. I believe in their vision. And that's what a lot of people are buying. They're buying the dream and the vision. And Elon Musk is certainly someone you don't want to bet against. So that's the reason why I've gone with trading SpaceX stock. Anyway, that is went off a bit of a tangent there, and I know SpaceX is going to be IPOing on Friday, so it's really good that you asked these questions for this live stream. I hope you guys come back next week. So we're doing this every Wednesday. I hope you guys do come back with even more questions, and we can go through the SpaceX stock and just take a look and just see whether I was wrong or I was right. I don't know. We can go and just break that all down. We can break down every financial asset class that you guys want me to. But the main ones I look at are the DXY, all the major currency pairs, gold, commodity, of course, and BTC. So if you guys do have anything else you want to ask me, really super happy to go into detail about it. It's such a fascinating industry, and the more you know about the fundamentals and what's happening, economically and around the world, the more accurate I believe your trading is going to be. Right? It's helped me substantially. I can't wait for Friday's IPO either. I'm going to be watching it live. I can't wait when the New York Stock Exchange opens. I think it goes on at 9:30. Obviously it opens at 9, but I think the IPO usually starts at 9:30. I don't know the exact time. And then I think orders will begin going through 2 or 3 hours after that. And then you'll see tremendous volatility. So it's going to be incredible to watch. To be honest, it's going to be a really amazing thing to watch when they do eventually list or when the bell opens. So anyway, guys, that's everything I have for today. Thank you so much. And of course, you can reach out to us in our Discord channels. I think we have a Telegram chat set up somewhere. I can talk to our CS teams about that. But you're more than welcome to reach out, especially to myself. Any questions related to trading, AIFO, or prop trading or the prop trading space, very welcome to ask me any time. And we have an AIFO trainer program, and so eventually we'll be bringing out more trainers to do live streaming sessions with you guys. I only cover the London sessions, but we're going to have future sessions that cover the actual New York sessions. And we'll bring out some more content around that. So anyway, guys, thank you so much for the live stream. Thank you for joining me, and really good luck trading. And I'll be thinking of you guys on Friday when I watch the IPO as well. It's going to be really cool. Really looking forward to it. All right, guys. Anyway, thank you so much for joining, and I'll see you next week. Bye for now.